Good morning, and welcome to today's webcast, ESG Key Steps to Start Your ESG Journey. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams: Justin Neff, Assurance Partner, and Colleen Rozillis, Consulting Partner. Justin and Colleen lead the firm's ESG practice and have over a decade of experience providing ESG assurance services and strategy and governance consulting services. And with that, I will turn it over to Justin to get us started.
Thanks, Emily, and thanks everyone for joining us today. Colleen and I are excited to share some insights on ESG practices and things to think about as you're forming your strategy. This is a really hot topic right now. I think, as a firm, we've been providing ESG audits and consulting services for over 20 years. And I can personally say, over the last year, I've probably gotten more questions about this than I had in the previous 10 years. So definitely something that's on the top of everybody's mind. So really excited to be able to chat with you on this today. I think, we're going to start today with a polling question, just to get a feel for everyone's familiarity with ESG in the audience.
All right. Our first polling question: where are you on your ESG journey? And your options are A, trying to understand what it is; B, I'm interested, but I don't know where or how to start; C, we do some reporting; or D, I know everything about ESG initiatives. So I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit Submit. Just a couple more seconds here. All right, let's go ahead and take a look at the results. Back to you.
Yeah, so it looks like we've got a pretty good mix here. About 40% trying to understand what it is, 30% interested but don't know where to start. Good, about 24% already doing some reporting, so that's great. And then a few experts here, about 5% know a lot about ESG. So I think we've got a pretty good mix in the audience. So that's great. Hopefully, by the end of this presentation, everyone comes out with a little bit more things to think about as they're starting their journey. So I want to start with a quick overview of what ESG means when we're talking about the concept of ESG. So it stands for environmental, social, and governance. So, it's a general term used in capital markets and by investors and stakeholders to evaluate corporate behavior and overall impact of an organization relative to the value it creates. So the overall concept is it's about creating more value with less impact. Although some companies have been measuring and reporting on ESG efforts for a long time, in some case, maybe even 30 or 40 years, it's a relatively new concept for a lot of companies. That said, it's quickly becoming the standard for good business practices with a focus on performance that's measurable, reportable, and with actionable goals. So the Financial Times referred to it as the new measure of success for corporations, nonprofits, and countries alike, really basically showing that this is the direction that business is going as a whole, and companies should be getting on board with this. So when you break down what the different criteria are, environmental, social, and governance, so environmental relates to how a company performs as a steward of nature and the global environment. So some examples of criteria in the environmental area: carbon emissions or climate change considerations, water use and waste management, environmental policies and regulations, or materials sourcing. The social criteria examines how a company manages relationships with employees, suppliers, customers, and the communities it serves and where it operates. So some example criteria for these would be benefits provided to employees, health and safety for employees, gender pay gap, employee retention, supply chain, labor conditions, donations to charities. So the social factor covers a lot of different areas. And finally, the G covers governance. So how a company is managed by those in senior executive offices and by its board. So some example criteria there are business ethics, board compensation and diversity, executive compensation, board oversight and ESG initiatives, and privacy and data security. So while ESG factors are many times called non-financial factors, how a company manages them undoubtedly has financial consequences. So before ESG was the primary term, we've seen it called a lot of different things. So over the years, I think, when I first started working on these types of projects, it was referred to as corporate social responsibility, or CSR, which is essentially a similar concept where organizations consider interests of society by taking responsibility for the impact of their activities on customers, suppliers, or shareholders, communities. Sustainability reporting is also used kind of synonymously with CSR or ESG. While sustainability reporting has historically been more focused on the E or the environmental side of this, we're seeing ESG as a whole looking at all of those three sectors of things. So not just the environmental sector. Reports covering ESG topics are often referred to as corporate social responsibility reports or sustainability reports. But we're seeing all sorts of different forms of reporting, which we'll get into a little bit later on in the presentation. So why is this important? There are several reasons why this is important for companies to be thinking about right now. Customers are facing ESG practices or factoring ESG practices into purchasing decisions. So customers have a lot of choices on who to buy from these days, and they're starting to look at more than just price and product. Similarly, employees and recruits are placing more importance on companies' ESG practices when making their decisions of who to work for. I'll share some more statistics on this in an upcoming slide. Stakeholders want transparency on labor standards, supply chains, and inclusion and diversity efforts. We've been hearing a lot more on this. Investors and even lenders want to know what companies are doing in this area. In talking to some of the banks in the area, banks are starting to offer favorable rates to companies with sustainable business practices. And from an investor standpoint, some funds are actually adding mandatory requirements for their portfolio companies. For cost savings and tax credits, there are a number of tax credits available that align with ESG practices. These include credits for energy efficiency, research and development, federal and state hiring credits, investment tax credits, low-income housing credits, and several others. So these are credits that we're helping our clients take advantage of and certainly align with ESG practices. From a regulatory compliance standpoint, there's been a lot of buzz out there about the SEC's planned disclosure requirements. They haven't been released yet, but they're expected very soon. But outside of SEC disclosure requirements on climate change, I think there's been a lot of other government factors in the past, as it relates to supply chain, fair labor practices, and conflict minerals and other things to be aware of from a regulatory standpoint. From a standpoint of telling your company's story, ESG reporting really just provides another alternative means to communicate to your stakeholders. So, companies across the board are doing good things outside of just their financial impacts, and ESG reporting is just a way to share that story with all the people who are interested in hearing about it. And we put a bullet point here on to be seen as an industry leader. I think historically, the companies who are seen as sustainability leaders have been putting out reports, but the door is closing quickly, I think, on this to be seen as an industry leader. It's becoming more and more the norm to be reporting on this. So I think, we just want to make sure that everybody's thinking about it and taking those steps to start reporting on these types of factors. Honing in a little bit on the consumer spending habits, criteria that I mentioned earlier. So consumers aren't just basing their purchases on quality and price anymore. Environmental impact and sustainable practices are factoring into purchasing decisions. Local sourcing is becoming increasingly important. People are putting a lot of emphasis on this. And then large retailers are greening their supply chain and requesting information on suppliers' social and governance practices. For these large companies that are reporting on their carbon emissions or greenhouse gas emissions, they're starting to realize that a lot of those emissions are coming from scope 3 emissions or their supply chain. So, if they're setting ambitious goals on reducing carbon emissions, or want to make sure that their goals are aligned with their suppliers, they're going to start asking about this. And so it's becoming more and more of a concern for companies of all levels, with their customers wanting to know about this. From a recruiting standpoint, I know I can speak personally from being a professional services firm and hiring a lot out of universities directly in colleges. This is becoming a question. We're getting questions across the board on this in interviews, whereas 10 years ago when we would do interviews, nobody would be asking about this, but now it's becoming a priority for folks coming out of school, and they want to work for a company that's socially conscious and, taking the right steps and thinking about things the way they expect to. So, recent survey results showed that 83% of people trust a company more if it's socially responsible. 90% of young professionals would prefer to work for an environmentally friendly employer, and 50% of young professionals would actually turn away from an employer that lacked good ESG policies. So I think we're going to see that trend more and more in that direction, and it becomes more and more of both a recruiting tool and also something that can deter people from working to your company if you're not being transparent on your goals and progress that you're making in this area. So I included this here. It's a little bit of a reiteration of some of these, but this was a couple years ago, the Nasdaq put out a ESG reporting guide, which highlighted the business case for ESG, which is especially relevant today. I think the report highlights the value of ESG practices becoming more tangible and references several data points, including access to capital, profitability and growth, compliance and risk management factors, reputation, similar to what we talked about with the consumer preferences, information measurement and flow, and then just stakeholder relationships in general. I would definitely recommend checking out the Nasdaq report if you ever have to make the business case to someone else, or just understand some of the factors to consider when you're thinking about what is the business case for ESG. And with that, I think we'll take it to another polling question, please, Emily.
All right. Our second polling question: why are you interested in ESG? And your options are A, increases access to capital; B, generates profitability and growth; C, compliance and risk management factors; D, reputation and branding; E, information measurement and flow; or F, enhanced stakeholder relationships. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. I'll give everyone just a little bit longer. All right, let's go ahead and take a look at what everyone has to say.
Looks like the biggest factor is reputation and branding. About a third of the folks here are most interested based on reputation and branding, which I think is definitely valid. Compliance factors and thinking about what required disclosures are going to be coming up, and other areas there. Enhanced stakeholder relationships, pretty much across the board. But yeah, those reputation and branding and compliance seem to be kind of the biggest reason people are interested in this, which definitely makes a lot of sense. So with that, now that we have a kind of a high-level overview of what ESG is and why it's so important, I'd like to pass things over to Colleen to talk about how you can go about starting and implementing a strategy for ESG.
All right, thanks, Justin. And I'm not surprised by those poll results at all. It feels like, ESG and what we put in our reports is really a communication tool, right? And a relationship building tool with our stakeholders. So those two pieces of reputation and public risk perception, and then our stakeholder relationships really being put together, is a lot about what we're hearing from our clients in terms of, wanting to figure out how we form a strategy, how we communicate, how we tell our own story. You'll probably hear a lot about that from me over the next few minutes. So as we go through this, really thinking about the conversations that we've been having with our clients who are very much early in their journeys. As Justin said earlier, that door's kind of closing on being a leader, and now we're thinking about, okay, we don't want to be laggards here. We want to make sure that we're keeping up with our peers. We want to make sure that we're keeping up with the industry and making sure that we're doing the right things, and that we're really being competitive in the marketplace. So there are 5 areas that you're going to want to prioritize as you set out to establish your ESG strategy. The first thing is assessing your organization's readiness for ESG initiatives and reporting. The second is assessing your governance structure, collecting and then reviewing all of the data that you have available that might be ESG related, figuring out how you're going to report on that data and report on your progress, and then communicating and telling your own story. So when you're conducting a readiness assessment, there are a number of different components that are going to vary by your industry, your goals, and your risk profile. A few key areas to consider here. First is your strategy alignment. So are your ESG principles that you want to adopt aligned with your existing strategic goals and priorities? And if not, think about, who do we need to get on board? Do we need to incorporate them into our strategic priorities? Your strategic plan, overarching for your organization, should be a living document. It shouldn't be sitting on a shelf. So you and your leadership team and your governing body should be able to get together and say, okay, where are the gaps here? Do we need to revisit and identify those potential areas where we want to incorporate ESG? Second, we want to look at our risk profile, identify those areas where we might be exposed by either not adopting ESG principles, or if we were to undertake ESG initiatives, could we be more exposed, and figure out what risk mitigation activities we need to undertake as part of our ESG program. The third is to really identify resources, internal and external, to get the job done. If we're standing up a new program, there are going to be additional resources that we've got to tap inside our organization, and potentially figuring out how outside of our organization we're going to do that. And then leadership. So who's ultimately going to be responsible for ESG in your organization? An ESG leader is often a member of the senior leadership team. It's often someone with enough authority to influence others, someone who can pull portions of people and data across the organization, people who have external connections. In most companies right now, it's just one person. Yesterday, I actually had a meeting with an ESG practitioner, and she was talking about a huge part of her job is just working with that one ESG leader in a company who tries to decide which plate they're going to spin that day. In lots of organizations, it's one person who is pulling a piece of an FTE in kind of critical internal services across the organization, and figuring out, with the 2 hours a week you have of that person, what are you going to use them for? Trying to figure out how we can maximize our time, understanding that this is a really intense, cross-functional, important effort, and also knowing that that person does have to have the appropriate authority to accomplish their goals, because this is a big job. So the ESG leader should be supported by a core team made up of decision makers, data owners throughout the organization, people who can get them what they need, and people who are able to provide that support when they need it. Really important that all of the internal services in your organization are involved. So think about the appropriate people in finance, procurement, human resources, IT, risk management, DEI, facilities. Really get all of your internal services involved and on the same page. And it's going to benefit you if they're not already all in a meeting together, right? Make sure that they are. Operationally, people who are involved in service delivery, customer service, making sure that we've got operations and supply chain on board. And then folks who are engaged in board support. So we can't forget about that G part. Make sure that whoever is engaging with your board, whoever is engaging in governance is involved with your ESG initiative. Next up, we want to gather our data. So every organization right now is drowning in data. We have tons of it. We don't know what to do with it. And a lot of it can be leveraged for ESG reporting and measurement. So conduct a data inventory. You will not regret it. Start with your existing reporting. Look at your financial statements, your DEI reports, compliance reporting. Figure out what might be relevant there. Then look at your systems and the other data that you currently generate and identify what might be relevant for ESG. And then think about, is this data reportable? Is it repeatable? And is it auditable? As auditors here, within an assurance firm, this is something we think about all the time. What is data that we're going to feel comfortable reporting out to our community, to our stakeholders that we feel like we can stand behind? And it's something that we engage with our clients all the time. And then if there are gaps, if we understand that there are parts of our story that we might want to tell that is not showing up in the data, how could we fill them without maybe doing too much legwork? Could we fill them in the next 2 to 3 years? And then we want to look at governance. We don't want to forget this piece. Without an effective governance structure, ESG is not going to be successful. So there's a lot on this slide. I just want to point out a couple of things. I do a ton of governance work. The biggest challenge that we have with boards is that they are not engaged at the right level. We really want them kind of in that sweet spot where they are really effectively engaged in policy and strategy, that they're not in the weeds and that they're not way up too high and kind of checked out in just a rubber stamp board. So that means that they are really following appropriate policy governance, that they're not engaged too much in kind of staff day-to-day work, that we have an effective board staff partnership. And increasingly, we want to make sure that we've got our board really representing our staff, our stakeholders, and the community that we're serving, and making sure that we're moving toward that. We also want to make sure that our board has that skill set that we need to fully support our operational needs. And so we want a familiarity with ESG. We want to make sure that we understand risk management, our fiscal, legal, and our strategic issues. Assessing how you are, really making sure that on a regular basis you're doing board self-assessments, that you're doing 360s, and making sure that we are perpetuating a positive board culture is going to get us really far in terms of actually implementing and following through on our ESG goals. So we're going to do a deep dive into ESG reporting because it's a huge topic. But first up, I think we have a polling question. Emily, over to you.
All right, our third polling question. When are you looking to implement ESG initiatives? And your options are A, today, B, in the next 6 months, C, in a year, or D, I'm unsure. We'll give everyone a moment to think about this. For those of you that would like a copy of today's slide deck, you can download them from the folder that says slide deck and handouts, and we will also be sending the slides via email after the webcast. All right, just another moment here. Okay, let's go ahead and see what everyone had to say.
Well, this is a pretty overwhelming response. I also feel like we probably should have had yesterday as a response here. I think unsure is probably correct, especially when we think about kind of that first polling question where it was, I'm still trying to figure out what ESG is, trying to get our arms around what it might mean for our organization, right? What are the goals that we might want to set and what are our outcomes? So Justin and I will get into that for sure in the next section. All right, Justin, over to you.
Thanks, Colleen. And yeah, I think, the interesting thing to think about is before you can report on something, which is, the next step and what we're seeing companies doing a lot of is you have to first manage it, right? You have to have a strategy implemented. You manage what you measure, and so once you start measuring these things, then you can take the next step of reporting. And before we're getting into some forms of reporting and things to think about, I wanted to cover briefly just some of the challenges that we've heard from reporting, and also that we've experienced in our own reporting. We put out reporting on our inclusion and diversity efforts and some other efforts, and I've been a part of some of that reporting over the years. And there are certainly some challenges, starting with how do you start? ESG reporting is typically separate from financial reporting. As Colleen mentioned, a lot of times it's one person overseeing that program, and you inherently don't have those controls that you have in place for the financial reporting function. And so you have people pulling data from all sorts of different areas, trying to capture what's relevant and material to the company, and that can be a real challenge. There's no one set of standards for reporting. I'll get into this on the next slide, but there are a lot of available resources out there, but not one thing that's currently required, or one framework that's required to report under, especially in the U.S. And so, getting started on that can be a real challenge. From a reliability standpoint, verification of reports is still pretty rare in the U.S. There's been a lot more internationally that we've seen where companies are taking that next step to get the data they're reporting on, externally assured, whether to an audit level or review level of assurance. But in the U.S., it's pretty rare, especially considering that you have these, one person working on ESG efforts or a couple people, and to allocate those resources to an audit, can be somewhat of a challenge sometimes. What research has shown is that companies will many times just report on their positive impacts, right? If they're doing something great, they want to report on that. But if they fall short on goals, then they may elect to take that out of the next year's report, or not highlight that. And I think what's important to understand is that people want that transparency of both good and bad. They want to see if you set a goal and you fell short, why is that? And the companies that really take that step to explain, hey, we had set this goal, but here's why we weren't able to accomplish it. I think that makes the data that much more meaningful, and it makes people really appreciate the fact that they're putting this information out there. You may have heard of the term greenwashing. Basically doing that. Saying you're doing more than you're doing, only focusing on the positive things. To promote your products. And I think this is just something to be aware of, especially for reports that are out there. And as you're putting together your own report, if you aren't subjecting it to third-party assurance or audits or verifications, then, how do you know that a company is really standing by that? So there's definitely opportunities for greenwashing, which has been a challenge for ESG reporting in the past. So looking at reporting standards and criteria, there are a lot of them. GRI, or the Global Reporting Initiative, is a framework that's probably the most widely used worldwide. When we were first looking at doing our reporting at Moss Adams, we looked at that framework and definitely, looked at some of the requirements there to make sure that we were covering relevant information. And I think companies are continuing to use the GRI frameworks pretty regularly. In the US, the SASB standards, or Sustainability Accounting Standards Board, has been a popular framework. It's gaining popularity. It focuses more on the financial risks. So, things that investors are worried about or concerned about, whereas GRI takes a more holistic approach to the value a company is creating, and not just focusing on those financial risks. The Value Reporting Foundation is a new entity that's been formed through the merger of the SASB and IIRC. There are country-specific standards out there. What was formerly known as the Carbon Disclosure Project, now known as CDP, is an area where you can report, where companies can report their greenhouse gas emissions. So it's focused exclusively on carbon footprint, carbon impacts. The Climate Disclosure Standards Board consolidated into the IFRS Foundation. That was previously another board. And then finally, many companies actually just create their own criteria. There's nothing that says, currently at least, that you have to follow one of these frameworks. And so many of the companies that we actually work with on this create their own criteria and criteria against which they're managing and measuring their impacts. And so that's definitely an option at this point. A few that we didn't include on the list here, but certainly could be the Task Force for Climate-Related Financial Disclosures, which you may have heard of, or the UN Sustainable Development Goals, which we'll talk about in a little bit more. But this is again one of the challenges that's been out there in terms of there are so many different available frameworks and standards and everything. So where do I start? Some of the trends that we've seen from a reporting standpoint, outside of maybe just putting claims out on your website, companies that are actually putting out a full-blown ESG report, greenhouse gas emissions. Companies are starting to report more and more on their carbon impacts. A lot of organizations are actually putting out, bold claims like we'll be carbon neutral by 2030, or we'll be carbon negative. I think this is an important thing, and I think companies are focusing primarily, from what we've seen, on the Scope 1 and Scope 2 emissions. So those direct emissions through purchased, natural gas, electricity, rather than going into that next level of Scope 3 emissions, that relates to supply chain, employee commuting impacts, and things like that. Diversity and inclusion and recruiting practices in supply chains has been a huge area for disclosure lately. I think whereas I mentioned before, in the past, there'd be a lot more of the environmental impacts that companies were reporting on. Diversity and inclusion is becoming and that S of ESG is becoming more and more popular topic to report on. And especially for companies that don't have, huge environmental impacts. Maybe they're not manufacturing companies or anything along those lines that would have a lot of waste. Taking a stance on stating bold and ambitious goals. I mentioned the Sustainable Development Goals. These are 17 goals that were put out by the UN that companies can adopt with a goal of having that achieved the measurement progress by 2030. So that's a resource that's out there for companies who are looking to say, hey, what kind of goal? How should I set my goals? These are predetermined, and you can choose from those and try to align your targets with those. Another trends we're seeing is the human element. So framing successes and lessons learned through the stories of management, employees, and community members, going outside of just telling the company's story and telling, hey, how was this impacted by individuals' actions? And then finally, stepping beyond the traditional PDF reporting and trying to engage stakeholders by telling stories and having dynamic digital experiences. We've seen a lot of examples out there where companies are taking it to the next level and not just putting out a 100-page report on their sustainability efforts, but having more of where you can click around and see their different locations in the world and what they're doing to make sure Fair Labor Act and things like that. So a lot of different areas and means by which you can report data. It's certainly not limited to just one report. And with that, I'll pass it back to Colleen to go into a little bit on the approach.
All right, thank you. So jumping into our recommended reporting approach, like Justin said, there are so many varied frameworks, and because there aren't any specific standards to go on, one of the most frequent questions that we get is just where do we start? And how do we move forward with this when we don't understand what the end product might look like? And a lot of companies get really stuck there, trying to aim for perfection and not wanting to tell their story until they know that it's definitely locked down. And our advice really is to tell your own story, because without information out there, in a vacuum, someone's going to fill in that information for you. So get out there and tell it first, really kind of getting back to that poll that we had earlier around, most of your interest in ESG because of that reputation and branding aspect. If you look on the right side of this slide, there are so many variations that an ESG report can look like, right? The way that we tell our story about ESG comes not just in something that is labeled an ESG report, but actually our marketing materials, what we say on our website about us and our values and our goals as an organization, right? What is our employee code of conduct? What are our other reports look like? And so really thinking about what outcomes are important to us, our stakeholders, our staff, what our future workforce might think is important, right? And really thinking about that very broadly. We definitely recommend thinking about looking at some of those frameworks that are already in existence. If one of them aligns with you, like absolutely use one of those. But many organizations are developing their own criteria, developing their own KPIs, and you probably already have a lot of information available, like I mentioned with the data inventory, that tells your story. So just think about shaping that, identifying those goals, and getting out there and doing that. So to define those goals and outcomes, think about it like you think about your strategic planning, right? So do we have a mission statement for ESG? How does it align with our strategic plan? Do we need to fill in any of those gaps? Then really dig in and think about how our goals will be met. What steps do we need to take? What actions do we need to take to actually meet those? Make sure that our goals are clearly defined, they're measurable, they're outcome focused. Make sure that people really understand that. Define how each goal will be measured. We'll get into KPIs in a few minutes, and then identify who's going to be responsible for each goal. So we've got ESG leadership, right? We identified that person is probably a member of senior leadership. They're going to be really busy, spinning a lot of plates. There are going to be individuals who are going to be responsible for pieces of ESG across the organization. Identifying who's responsible for actually implementation and moving the needle throughout the organization is going to be really key to success. So goal areas are going to vary by every organization, your maturity, your values, your industry, your leadership, what your board looks like, the community that you're in, your customers. Here are some sample goal areas in each area of ESG. Some trends we are seeing, and I saw a question actually in the Q&A that I thought I would address. So there was one about professional service firms, so like CPA firms or law firms, so organizations like us. So actually pay equity is a really big trend for a lot of organizations, especially for professional service firms. We're seeing quite a bit of movement in pay equity here, not just looking at how folks, compensation studies, but actually we're looking at pay equity across many different factors in demographic factors, geographic factors, and really looking at very large data sets, being able to leverage the information that you have on your workforce, on the marketplace, and being able to use that information to move the needle in terms of your own DEI goals. We're seeing a lot of movement there in terms of some really interesting organizations that have been able to partner with companies to help them to achieve some really interesting equity goals there with their workforces. On the environmental side, the impacts of COVID have really changed up what folks have been able to say about their use of energy, their recycling goals, everything in terms of the workplace and flexible workspace and reduction in commute times, reduction in travel, all of that stuff. Everyone's energy usage has been incredible over the last 2 years. So as we have started to slowly come back to the office, what that shows up as in our ESG reports might not necessarily be bad because it has benefits for some of our workforce who want to return to the office, but it's going to look a little bit different. So we're going to have to figure out how we want to tell our story because the numbers have dipped so dramatically because of the pandemic. And then on the governance side, really focusing on board diversity. As I mentioned before, there's the Nasdaq requirement. The state of California has some board diversity requirements. Really thinking about diversifying boards, figuring out how to better reflect the community and get gender and racial diversity on boards. We're really seeing that a lot in organizations and trying to work very hard to focus on that. Then really thinking about, as we have identified our goals, identifying then how we're going to measure them. I attended an ESG symposium a couple of months ago, and there was a roundtable, and everyone agreed, like, no one wants to read a 200-page report. We want a dashboard. We want easy to understand KPIs. We want relevant data that folks can understand. Like Justin said earlier, this idea of we want to show that we are adding more value and we are giving less impact to the world, right? So we want to pick KPIs that are outcome focused. And when we are picking KPIs, a couple of just pieces of advice. So we want to make sure that KPIs relate to the goal, right? We don't just want to pick data kind of out of nowhere just because it's available. Workload data, just kind of counting widgets, is not super relevant. Really make sure that they are related to outcomes. Sometimes they can be milestone measures kind of along the way. What we like to do when we are considering KPIs is to collect 3 to 5 years of data and just see what it looks like, see what the trend looks like. Is it actually telling a story? See if it's performing toward our target, and just make sure that the data is actually relevant. And then we recommend picking just a small set of KPIs, right? You don't want to overwhelm people with data. So Nasdaq has provided a recommended suite of ESG metrics. It's not too many. You don't have to pick all of them. It's a great place to start if you don't know where to start. Their reporting guide that we mentioned earlier actually has some detailed information about how to set targets for each metric. Some are going to be simpler to report than others. And it's our hope that in the future that if enough organizations start reporting on them, that it will allow us to enable some benchmarking within industries and maybe even across organizations. So as you're building an ESG dashboard, some best practices to consider. Dashboards come in many shapes and sizes on many platforms, but successful dashboards do all of these things. We want them to be user-friendly. We want them to show where we are right now. We also want them to show our trend. Are we moving toward our target? Are we getting where we want to be? And if not, we want to show why. I like to see dashboards that allow you to drill down into the metric and see why it's relevant, why we're tracking it, why it's meaningful. And then for some organizations, we might actually want to say, how much of this can we control? Because we might pick a KPI that's not totally under our control, especially in the E section. There are a lot of things environmentally that are not 100% within the realm of our control. And so it's worthwhile for us to explain that. And if there are any milestones of note, it's good to create a narrative around that. And then we wouldn't be an accounting firm if we didn't talk about internal controls. So it's important for me to talk about that so that I can keep my job. So as you are putting together your ESG report, make sure that you do have appropriate controls around that data. An ESG report is not going to hold up to a review or an audit eventually unless you've got controls supporting it. So if you do have a report, please make sure to establish a control structure as if you are producing it like a financial report. So really think about where your data is coming from. Make sure, again, this idea that your data is reportable, repeatable, and auditable. And make sure that management knows where the data is coming from and can support it. And most organizations, when they're kind of in year 3+ of ESG data, that's when they start thinking about assurance of their ESG reports. And we want to kind of think about consistency in our data. Our goal ultimately is that. But we also know that ESG is in its infancy in a lot of organizations. We're evolving and the information is going to change over time. So like I mentioned at the beginning, we don't want to let perfect be the enemy of the good. And so you want to tell your authentic story, build that trust with your stakeholders, and understand if the story is evolving, then you can tell that also as part of your story. So think about this as your goals are long-term, right? Your goals should remain in place. If your KPIs change over time because what you're measuring over time, because the factors that are influencing our business operations are changing over time, that's absolutely okay. And if your report's being audited or reviewed, that's something that you can work with your assurance firm with to figure out how you want to communicate that as well. So when you're telling your ESG story, just to wrap up, really thinking about who are your stakeholders, identifying really what differentiates you in the marketplace, telling that authentic story, telling that outcome and results driven story, making sure that you are okay that in the short and medium term, things might evolve because we're in an evolving and changing world, and that your values and your goals are going to be long term and that you have a strong foundation in who you are, and providing that important context to your stakeholders and making sure that you're out there really building that trust with your stakeholders. All right, and Justin, over to you to talk about assurance.
Thanks, Colleen. My favorite topic, being on the audit side of things. When we're looking at ESG or CSR verifications, As I mentioned, we've been doing these for a long time, and there are a couple different ways that you can do them. So, when you think about traditional audits or reviews, you may think about a CPA firm. There are some other reports that you may see from companies, expert panels or a third-party opinion that's not coming from a CPA firm. This isn't an attest engagement or any form of verification. This is more where a company hires someone to come in and maybe give an opinion on their materiality or their assessment of factors, how they determine what to report on. But it's not giving any kind of assurance over the actual data. So, as certified public accountants, we have certain requirements to be independent of companies. We can't be an arm of management. We can't be working on their behalf. We are independent and verifying this information is correct. I think there is no requirement out there if you want to get an audit that it has to be from a CPA firm, but investors and bankers and stakeholders of all types have come to understand that if a CPA is providing assurance that there's been a level of rigor that's put into the engagement, and they can rely on those numbers for their decisions that they're making. From a standpoint of what's the value of external assurance, it comes back to what I spoke about earlier in terms of consistency, reliability of data, making sure that companies aren't greenwashing. It creates a level playing field. I think, a lot of times what people want to do is report only the good, like I mentioned earlier. But, having that third party assurance, it holds companies accountable to make sure they're reporting consistently. Colleen mentioned internal controls. I think one of the big benefits to having an assurance engagement done is that we can give recommendations on internal controls. So, if we're doing an audit level of providing an audit level of assurance, we're required to evaluate internal controls as part of that process. And so a lot of times some good recommendations can come out of there and best practices and, and helping management look at ways to continually improve their reporting. From a reporting of greenhouse gases or carbon footprint standpoint, if you're reporting to CDP, CDP actually gives more points or a higher score if you get third-party assurance over your carbon footprint. So that's an area where we've provided assurance to companies and helped them get that higher score by subjecting it to the third-party assurance. So how does this pertain to ESG reports? The standards that we follow are attestation standards created by the Auditing Standards Board. We can audit or give review level of assurance over full reports, just pieces of reports, product certifications. There's a lot of areas that we can give assurance if you want to demonstrate that you're taking that next step to whomever is the user of your report. So please do reach out if you're exploring this and thinking about it. And I'd be happy to meet with anyone on the call who's interested in what that might look like. There are two levels of assurance, one being an examination, or basically a reasonable level of assurance similar to an audit of financial statements that we're essentially opining on numbers. A review is more that negative level of assurance. So we're not aware of any material discrepancies in the numbers to be in conformity with the criteria. So a step down, we don't take that next step of really evaluating internal controls, but it's more focused on management inquiries, analytical procedures, looking at fluctuations and things of that nature. Just a quick comment on greenhouse gas emissions. Those are typically performed as review engagements, just due to the inherent uncertainty of measuring things and the calculations that go into those carbon footprint calculations. So an audit report is addressed to the stakeholders. So not to the company. It's generally addressed to the users of the report. So who would be relying on that information? Typically what's included is an identification of the data that's subject matter of the report, the criteria used. So if you're reporting in accordance with SASB disclosures or GRI, or maybe the company's own criteria, that needs to be outlined in terms of what it's being measured against. A lot of times we'll include the types of procedures that we're performing actually in the report, so a user can see what we did or what an audit firm did, and then ultimately an opinion that basically is saying, yes, we agree with these, that there's no material modifications needed, or whatever level of assurance you're giving. Some example procedures when we're performing an examination engagement. would be, as I mentioned, testing the effectiveness of internal controls and systems. We interview key individuals responsible for data collection and reporting. Sometimes it's one individual, a lot of times it's folks who have other day jobs, so to speak, reporting or collecting financial data that we also meet with if they're responsible for overseeing that data collection. Reviewing relevant documentation, corporate policies, management reporting structures. A lot of times we'll send third-party confirmations, if that's relevant to the data that's being reported on. And then perform tests similar to what we would for a financial statement audit. We'll review underlying support documents if it's relevant to what's being reported. So, these can vary depending on what the reporting content is, but these are some examples of the procedures that we would perform in those types of engagements. I did want to highlight that many of the companies we work with, I say the majority of them, rather than getting a full report assured or having an audit performed over that report, they will pick specific metrics that they want us to give assurance over, basically telling the users of the report, these are areas we're paying especially close attention to or prioritizing. So we'll work with management to understand, okay, what are you trying to report to your stakeholders? What do they value the most? And maybe in an entire report, there's 4 or 5 metrics that they feel like are the most important. Those are the ones that we'll focus our audit procedures on. That allows you to keep costs down and also keep your resources utilized in the best manner. So I just want to highlight, it doesn't have to be an all or nothing thing for those types of engagements. And with that wraps up the assurance portion on that. Again, I mentioned I'd be happy to just have any follow-up discussions with anyone who's looking at that. We did include some resources here that will be available. Some of the reporting framework sites, some reports put out by the AICPA, and a number of other resources. So hopefully you find those interesting. And I think with that, we'll do our final polling question.
All right, our last question. What areas are you looking for help with? And your options are A, ESG third-party assurance, B, board governance, C, tax benefits for ESG practices, D, strategy and operations, E, data analytics, F, transaction services, and G, investment opportunities. We'll give everyone a moment to think on that. And then once you have completed all CPE requirements for today, you will be able to download a PDF of your CPE certificate from the CPE progress window.
Looks like we've got about 60% done.
Yep. And then we'll have some time for questions. So if you have any questions for Justin or Colleen, you can enter those in our Q&A window. All right, looks like we've got just about the majority of everyone. Okay, let's go ahead and see what everyone had to say. Back to you.
Okay, so a little bit across the board. So strategy and operations definitely being the most at 32%. Some third-party assurance, governance. These are all things that we help our clients with. So if this is something that you're interested in, definitely feel free to reach out to myself or Colleen or both of us afterwards. We'd be happy to have any kind of follow-up discussions. With that, I'll pass it to Colleen for any closing remarks you've got, Colleen.
Yeah, this is a really interesting polling, and actually it's funny because my team works with our data analytics team all the time, really thinking about how do we set ourselves up to become a better data-driven organization? How do we make sure if we're establishing an ESG strategy that we're measuring the right things and building a better dashboard? So this totally tracks with exactly the work that we do with clients, and then with the fact that then the next kind of biggest area that we have a lot of interest in is ESG investing, and really thinking about socially responsible investing, what our portfolios look like from both kind of the company side and from the individual investing side from our wealth management folks. So this definitely resonates with what we've been hearing. It sounds like everybody's minds are on exactly the same tracks. I want to thank everybody for coming. And Emily, do you want to jump into the Q&A?
Yeah, so we do have, like I said, we have a couple minutes for questions here. You can either reach out to Justin and Colleen directly, or you can submit a question in the Q&A. We got a few questions coming in. Let's start with, do you find that ESG is a focus of public companies rather than private, or do you anticipate public will lead the effort with private companies having to follow on later?
Yeah, and this is a good question. We had a couple that were kind of similar. We had another one around kind of our private companies focusing on ESG. You know, we're seeing kind of a few different trends. One is definitely public companies are ahead of the curve, and that is in part because of regulatory concerns, right? More likely to be multinational companies. And in Europe, they're about, 3 to 5 years ahead with standards from the European Union requiring some reporting here. So there's that piece. There are Nasdaq requirements, obviously, for certain pieces of ESG or just other kind of standards that are coming out and guidance coming out for ESG. But the other thing that we are seeing with private companies is that, again, we get to that reputation and branding piece. So we are in an employees marketplace right now. I was just on a call with a client a couple of days ago where they had just realized that they were actually very strongly mission driven, that they had a really great ESG story to tell, and they had just never told it before. And so they wanted to kind of gather all of their pieces together and get an ESG program together, in part because they wanted to make sure that they were more appealing to potential investors, more appealing to potential stakeholders and potential employees. And that was really important for them because they were growing a lot and wanted to continue to grow. So I think what we're seeing is that private companies are becoming more interested in this space because I think it's in the water, and it's also this idea of it's making us more competitive in the marketplace. And so, we're absolutely catching on to this idea that in order to be competitive, in order to keep up, we've got to have some form of an ESG program. Justin, is there anything you'd want to add to that?
Yeah, no, I think you said it well. I do think that the public companies will provide some level of example for smaller companies to follow, but it's definitely not exclusively a public company thing to be reporting on ESG. I think we have seen that years ago we saw that was the case, but now it's becoming more and more important for companies of all sizes, whether public or private, and ultimately, as the SEC implements disclosure requirements, I wouldn't be surprised if, down the road that trickles down to private company reporting requirements as well.
All right, let's see. What ESG goal areas would you recommend for a tech company?
Oh, yeah, good question. So we actually had a tech company ask me that a couple of weeks ago. With tech companies, we have a couple of things. So, server farms take up a lot of energy and have a huge environmental impact. So that's something that a lot of tech companies are focused on. And I would say workforce diversity is a huge piece of the pie with tech companies. When we think about kind of the developer pool and the pipeline, women and BIPOC employees, just even when we think about kind of the computer science programs and what the pool looks like there, it's really a challenge in terms of diversity and even getting that pipeline built up. And so a lot of companies are investing kind of pre-college and trying to measure that impact and report on that impact. We're seeing that quite a bit. And that also reflects in what your board looks like, right? And really investing and having a more diverse board, being more connected with your community and things like that.
Great. Let's see, we can probably squeeze in one more question here. What meaningful S areas are companies focusing on beyond the basic diversity statistics?
I would say a lot of companies I have seen recently start to think about reporting on their community involvement and engagement, thinking about what are we doing, we saw a lot of can we just put our DEI report with our environmental, our CSR report, and then we're good, right? But really thinking about what are we doing in terms of community engagement, what do our employees do in terms of donating and volunteer hours and things like that. and what is our true impact in terms of our community? I think we see quite a bit of that, and actually taking a long, hard look at what type of a corporate citizen we are in the communities that we work and live in. I've been involved in quite a few discussions about that. And that's pretty interesting. And it definitely is a series of conversations, right? Not just one. And it's going to vary a lot based on your industry, whether or not you're a nonprofit, whether or not you're a private company or a public company, and where you're located and things like that.
Great, thank you. We are just at the top of the hour here, so we are out of time for questions. However, if you had questions today that we didn't get a chance to respond to, we'll be doing our best to follow up with you after the webcast. Thank you so much, Justin and Colleen, for a great presentation today. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you all for joining us, and we hope you'll join us again next time.